You're listening to Techsuite for the C-suite, where we bridge the gap between technology and executives.
Yo, what up, Adam? Thanks for coming on.
Absolutely. Great to be here.
Thank you. Can you please give a short introduction to you, what you do in general? I heard you're like really into businesses on chain, which is kind of interesting.
Yeah. I got into crypto professionally a few years ago to work on something called DAOs. Now, DAO is DAO, and it's not actually that important what it stands for, but the original acronym stands for Decentralized Autonomous Organization. So don't get too caught up on those words necessarily. But what DAOs are on-chain organizations, to your point, is one way of looking at it. Maybe a slightly more advanced way of looking at it, and we can get into more detail later if you want, is these are organizations that are doing certain things on the blockchain that you used to only be able to do using paper documents and PDFs. So things like keeping track of who the members or owners are of an organization or a company, keeping track of and doing your governance process, your voting, keeping track of your kind of legal structure and agreements between the members can be done partly on chain. So you're taking those things that used to be done only on paper and with lawyers, and you're doing them now in an automated way. So the company I've been working on is called MyDAO. It stands for Marshall Islands DAO. And about almost exactly 3 years ago now, we passed our first law in a country called the Marshall Islands, which is a sovereign nation, a former US territory in the South Pacific, that has long been a very popular corporate jurisdiction in the shipping industry. So there are 40 New York Stock Exchange companies, and no one would know this if you're not in shipping, but they're Marshall Islands corporations. And so what we were helping the Marshall Islands do is pass laws to create the best jurisdiction in the world to domicile crypto organizations, including DAOs. And so that's the short version of what we're working on. Obviously, happy to get into more details if you'd like about how it happened and what we do specifically at DAOs and everything else.
Yeah, let's walk through your path first before we go back into the legal and how that whole DAO thing works. Because I found it super interesting that you're like, oh, well, instead of just having lawyers and having to talk about all of this, can we just automate this because we have this permissionless blockchain layer? But how did you actually get into it? What's your path into it?
Sure. So in 2012, I was lucky enough to come across an article. It was either the New York Times or the Wall Street Journal about the Silk Road, which if people haven't heard of, this was one of the original illegal black markets on the dark web, and you had to buy the items using Bitcoin. And when I heard that there was a dark web, I had to find it because I've been obsessed with the internet since I was a kid. I mean, I started my first company when I was 13 doing computer and internet consulting. But even at 5 years old, my dad was teaching me QBasic for anyone who's old enough to know what that is. And I've been just obsessed with the internet and technology my whole life. So I had to find the dark web. I had to find the Silk Road. So I eventually figured out how to use the dark web, how to find the Silk Road. And so once I got there, I learned about this Bitcoin thing, and I had to figure out how do you buy Bitcoin. So I figured out, and at the time there was nowhere online. You couldn't go to an exchange and put your bank account information in. I was literally sending Western Union MoneyGram, type transactions across the world, and then trusting that that person was going to send me the Bitcoin, later that day once they picked up the money. So I was lucky to get into crypto early.
That was way before Coinbase, right?
Way before
way
Coinbase,
before
yeah.
Coinbase and those exchanges.
Exactly. Yeah. So then the next stop on that journey was, so at the time I ran a Web2 company, a study abroad review website. But I ended up going and working in a big finance company called Capital Group, which is one of the world's largest asset management companies. And I was tasked with doing research on emerging technologies such as blockchain and crypto, also AI and cybersecurity. And so in 6 years, the 6 years I spent there, I went really deep into crypto. And that's when I eventually decided I had to leave to start my own company in crypto because I just had that entrepreneurial itch, I guess.
You were like, I can't take this anymore. I need to get back to my own thing. And because you read all about it, you're like, oh, let's get into crypto. And that was MyDAO the first thing that we were like, okay, no, this is what I'm gonna do and explore, or how did that go?
It's a good question because actually, no. So I left a capital group and started a DAO consulting company. So DAOs were what I had decided I was going to focus on just because that's where my passion was. And I felt like I was early to DAOs, which I wanted to be
But
early to something.
what sparked that passion? How did you go from, okay, well, I read about this for the last 6 years potentially, or how did you stumble up onto this and like make it your passion?
Yeah, so about a year before I left Capital Group, I decided to research everything happening in crypto, every type of job or company you could possibly build or start. And then I would decide which one to go after myself. So I mapped out everything happening in crypto from a business perspective, right? What could you build? What service could you provide? Everything from media and podcasting to building layer ones to building in DeFi to NFTs, DAOs, everything else. And I worked a lot on that, and eventually decided that DAOs were the thing that I thought out of everything else happening in crypto was the most exciting and that I could get the most passionate about. Why most exciting? I'll share because that may be interesting to people listening. Also happy to share why I'm passionate about it. But the most exciting because I felt like it was so, this was 3 years ago, so new and growing so fast that it felt like it was the right time to start a company to go after an opportunity in the DAO space. And by the
What
way,
made you
3 years
excited?
later, I think you could still be early in DAOs if you want to. So it's going a
So
little
like
slower
the
than.
timeline you had in mind probably didn't match up to the timeline of others,
Yeah,
which is
and in
fair.
fact, when we started the company was like at the height of the last bull run, and then as soon as we started the company, the market fell apart. Everything got harder. Our valuation got chopped for raising money, by like 5x. Everything got harder and grew slower than we would have liked. But hopefully now we're on the precipice of the next big growth spurt.
Yeah, well, I for sure am rooting for you in getting some of that if it happens and how it happens, or just outside of it even. Because I was talking to a good friend of mine today, who's running companies, and he's a little like looking at 2020 30 Europe, which is in 6 years from now, and being like, this Europe thing doesn't really look too promising, um, out of economic and socioeconomic reasons. And he's like, okay, how can I go and where can I go? And he's looking for that. And me also coming more from the blockchain side, I'm like, well, for a bank account, if we just put the bank account on chain, the only problem we haven't yet solved is a good store of value, because we still transact in fiat. And if you look at every kind of cryptocurrency compared to fiat, they're really volatile. But from a governance standpoint, maybe this DAO thing is the universal, oh, you're actually not tied to a jurisdiction anymore, potentially. Like, this is what got me excited about it today.
So there is what I call the revolutionary view on DAOs, and there's also an evolutionary view. The revolutionary view is, I think, what you're talking about, where this is a way to have and run and be a part of organizations that the government cannot stop you from doing. Just like the government cannot stop you from using Bitcoin, it cannot stop you from using DAOs to organize with other people, pool money together, and act with that money and take other actions on the blockchain. Now, that's not the world, though, that most people live in, the revolutionary world, right? Most people are living in the world where they don't want to do anything illegal and go to jail or lose all their assets. What that means is that, well, everywhere in the world, there are laws surrounding when a group of people gets together for some common purpose and pools their money and starts doing stuff. There's laws everywhere that pretty much everywhere that say if you do that and you don't register in some jurisdiction as a legal entity, what's called a legal entity, each member of that organization can be held personally liable for anything that goes wrong with that organization. Now, in some places like the United States, one person can be held liable for the entire thing. Some other countries, each person is only liable for their share of the organization's activity. But either way, the solution is a legal entity, and that's the business we're in. We can get into that. And when you form a legal entity, you are tying yourself to a jurisdiction, to go back to your original point. And so most DAOs are kind of acquiescing to the fact that they're operating in the real world and have to still have a legal structure, a legal entity, etc. And actually, just this week, there was a big story. I don't know if you heard, but Lido DAO, which is one of the biggest DAOs in the world, has been sued. And the judge found exactly what I said, which is still surprising some people, that a DAO will be held as what's called a general partnership, which means all the individual members of the DAO can be held liable for the activity of the DAO because they didn't register a legal entity somewhere. So different ways of looking at it.
And then you're being like, okay, with the Marshall Islands, we have found this one place where now that you need a legal entity, here's a good jurisdiction to set that up that hopefully doesn't screw you over or have any of the problems in the jurisdictions that people generally look for when they try to start a company, which for you is most likely being US based. It's probably a like US LLC that most people look to, or an S corp. While in Europe, it's more like, well, we have over 20 countries in the European Union. Any of those can trade with each other. Then there's like Switzerland, which is a little more special, has some other benefits and drawbacks to it as jurisdiction. Internationally, in Asia, there's then Singapore, Hong Kong. There may be India if you want to be in that market. It's like, how do you take all of those possibilities and then be like, well, okay, we're taking this small like island state, and this is literally the best to me, from a jurisdiction standpoint, has to be ranked amongst like stability, which is like political, and also on the economic and socioeconomic standpoints. Because like if there's a war in Europe, then Germany being stable economically and politically now equates to nothing. And also the jurisdiction obviously being favorable, right? So like those two have to come together. You need a favorable environment with some stability at least. So how did that deciding process go?
So, it all started when, so the first company I started, by the way, I go back to the story, after I left the finance firm, was doing DAO consulting and technology. And working for some clients, like quickly discovered that there was this challenge around legal entities, because every single legal entity option in the world, so whether we're talking about Cayman, whether we're talking about Swiss, all the ones you just mentioned too, US based entities, they all had certain requirements that we felt were not a good fit for DAOs and Web3. In particular, it was, first of all, really bad securities laws. That's kind of a separate issue. Second of all, the requirement to have managers or officers or a board of some kind. A lot of DAOs don't have a board or managers. There's a whole other topic we could get into, but they don't. And they operate in a more direct democratic manner. And the third thing was the requirement for companies to know the names and addresses of all of their members. It's just simply written into the laws of every jurisdiction in the world. Because that was the only way to keep track of someone, was their name and address. It was just kind of the way it was. And so we set out to find a place where we could try to develop a solution that solved those particular problems, made it easy to launch a token, and solved the management and the anonymity problem, or at least pseudonymity problem for DAOs and Web3. We chose the Marshall Islands because we had a relationship there, and we knew that they were huge in the shipping industry. And so it seemed like a good place to start. So we reached out to a senator in the Marshall Islands and began the conversation. Now, to your point about stability, luckily the Marshall Islands has a strong stability from the fact that they're an extremely close US ally. In fact, they're part of what's called a compact that makes them a quote unquote freely associated state. Now, that's not the same as a state at all, but they do actually get, not only do they have a huge US military presence there, but they also have a lot of financial support from the United States. They even use a lot of US agencies. They use the Postal Service. So when you write a letter to the Marshall Islands, the address looks like a US address. You don't even have to put the country, you can. So it's kind of the best of both worlds, where it has the stability of the United States combined with having its own sovereign jurisdiction over its corporate and criminal law, so that you can do interesting things from a legal and regulatory perspective.
That to me is really, really interesting, because one good friend of mine that I'm just thinking of is like, well, the US is this juggernaut, but the way that the law is set up the liabilities and being able to just directly be sued over mostly anything with potentially unlimited like liability and fines is something that he just is generally just not interested in at all. uh, from a business standpoint. That sounds like, well, if you're in the Marshall Islands, you may get best of both worlds in U.S. stability without the like baggage that may or may not be, from whoever's standpoint you're looking at, the U.S. Legal and financial system.
And you know, on top of that, the Marshall Islands corporate law is actually based off of Delaware corporate law. And so that's a huge benefit to lawyers all over the world who have to work with the project because they're familiar with Delaware, since it's the most popular place in the world to start a
Yeah.
company. And so we take Delaware, basically a copy of Delaware's laws, add some crypto and DAO friendly legislation, and now it's, again, the best of both worlds in that regard. Another thing to mention, you know, you brought up jurisdictions all over the world. You know, if a project is entirely focused on one geographic region, like I think a good example, I'll just make one up, Boston Community Radio DAO in Boston, Massachusetts. If you're focused entirely on Boston, you need to use a legal entity out of the United States because there's laws around taxes and other things where if a bunch of Americans doing things only in America, raising money for Americans and providing a service in America, if they use an offshore entity in the Cayman Islands or Marshall Islands or whatever, they can actually get in trouble for that. So you have to be a truly, and that's true in a lot of other countries as well. You have to be a truly global project, which a lot of crypto projects are, right? Inherently, you have to have people from around the world serve the whole world, investors from around the world, activity around the world. Then that puts you in a position where you can pick and choose entities anywhere in the world. And whether you pick one or you combine multiple for some reason, you know, a lot of projects will have a local entity where the founding team is, if they're all in the same country. And then they'll have an offshore entity where they get to pick the best of the world, you know, pick the Marshall Islands if it's a good fit, because of all of its benefits. So another thing to keep in mind when you're looking at jurisdictions.
Yeah, one thing there that I always struggle with being in Europe and having so many social benefit laws is that depending on where you work and how much time you spend there in an interval, you can really be screwed, even though you're not even European. You just were in Europe for that
Mm.
time and you still worked. So there's a bunch of legal headaches that go into that. But like, when you compared global jurisdictions, did you go beyond the US and also explore like some of the things we mentioned, like potentially even South America or like Africa, Europe, Switzerland especially? There's like a lot of foundations in crypto that are in Switzerland and some of the Asian ones.
We looked specifically very closely at the Swiss Association, the Cayman and BVI Foundation companies, and the Panama Foundation Company, because we perceive those to be the most popular in the space. Now, since we come from the US, that may have been like a US centric perspective. I
Yeah.
think we probably would have looked closer at Singapore in retrospect. But those are the ones that I'm most familiar with.
It's like when you make that when you make that decision, what kind of influences that? Because I feel like that is really really interesting to see, like, oh, when you're picking a jurisdiction, because you're not only picking a jurisdiction for your project, you're also picking one for every other project that you're most likely going to be working with, right?
Mhm. Well, so okay, so one thing you want to look at is that not every legal entity structure or type is available in every country. So, like if you pick Switzerland, you're not just picking Switzerland, you're probably looking at the Swiss Association because that's what's most popular in crypto. Maybe another one or two types as well. If you're looking at Cayman, you're looking at the Cayman Foundation. If you're looking in the Marshall Islands, you're looking at the Marshall Islands DAO LLC. If you're looking at Wyoming, you might be looking at the Wyoming DUNA. These are all different legal structures with different requirements and capabilities in terms of how you structure an organization. You might also be looking at Colorado Cooperative, which some DAOs have used, right? Each of these has a different legal structure, a different tax structure, different governance structure or prescription around what your options are in terms of governance, different securities laws. different laws around VASPs, virtual asset service providers, which are like crypto financial services companies. So you're not just picking like which is my favorite jurisdiction from a like country by country perspective. You're really also looking at which of these structures is best for my company, and if a foundation is what you need, look where the foundations are, right? And by the way, association and foundation are very similar. If a DAO LLC is the right fit for you, well, you're only going to find it in the United States and the Marshall Islands so far.
Yeah.
So that's the other thing you need to look at.
Dude, to me, that is fully fascinating because I have a full-on tech background. So if I try to evaluate those, I try to find checkboxes to just check, kind of like making it a requirement sheet and then seeing what kind of matches my requirement sheet, which in law works because, yeah, you can still check the requirement sheet. But what is way more important is what is between the lines of my requirement sheet that I didn't consider, or whether jurisdiction will move, or how it's intended to be used, and all of those. So like that to me is a full-on interesting space.
Yeah. And it's very hard to do a check mark style analysis. We have one on our website. We felt it was necessary to do. But if you look at a really detailed analysis by lawyers comparing these jurisdictions, they refuse to just do a matrix with check marks or circles or whatever, because there's nuance to all these things. And it always depends, right? That's the lawyer or consultant answer to every question. It depends. It really does depend on the activity of the organization, where that activity is going to take place, where the members are, where the investors are, all these things come into play. And so if you do a chart with just checkboxes, it can be very hard to account for the nuances of each situation. So unfortunately, that type of thing is hard to come by.
And then, well, how did you get the how did you get the courage to put a check mark for legal stuff on your webpage then?
Well, one reason we're able to do that is that we're not lawyers. We're not a law firm, right? So I'm a tech entrepreneur, right? I found the dark web in 2012 and Bitcoin. I came across this problem because I was building technology for people. Now I've written laws and regulations with the help of lawyers from around the world, and not even with their help for the first one because we couldn't afford it.
Wait. Walk me through that story.
Yeah,
Walk me through that story.
Mid 2021, when the Marshall Islands senator said, hey, let's give this a try, we looked at so Wyoming had just passed the first DAO or Web3 legal entity law in the world, which was a DAO LLC. We literally took a copy of the Wyoming law, and I can say this because you're allowed to do that, right? These are open source documents. Took a copy of the Wyoming law, made some adjustments to it to make it even better, and gave it to the senator. He had the attorney general review it, give feedback, went to the parliament, and the law passed. And we did actually have a lawyer on the team at that time. But interestingly, one of the things I've learned is that not all laws are written by lawyers. And certainly they're not driven by lawyers, right? They're driven often by special interest groups and business professionals who have some legal experience. To your original question, what's interesting about that is, lawyers have certain very specific ethical and legal requirements about what they're allowed to say and when they're allowed to say it, right? So you'll always hear lawyers be very careful if they're on a podcast or something else about what they're actually willing to say, and give tons of disclaimers, right? Because we're not lawyers, we don't have the same requirement. So obviously we have an ethical requirement still to be honest with our customers and our prospects and everyone we work with. And we give a disclaimer, making sure people know that we are not lawyers. And this is our business opinion and business advice, not legal advice. But I think that gives us a little more flexibility to try to simplify things for the market in a way that lawyers simply cannot do, because it's not precisely accurate for every situation, depending on every nuance. Whereas for us, we're willing to simply generalize and do the best we can to give people simple information that they can act on, while telling them they should hire a lawyer if they can.
I literally love that, because me, from a tech consultant standpoint, the first question somebody asks when they have to put up a webpage in Europe is data privacy policy and their copyright stuff and the general imprint. And I'm like, well, I can provide you with a template that I got from a service provider. But since I'm not a lawyer, I'm not like I can't just tell you that this is going to be secure.
Hmm.
I can fulfill you with best practices, but I'm not a lawyer. Or when they're then like, oh, how does that work with GDPR when we do this technical feature? And I'm like, in our experience, it has been fine because of that and that.
Right.
Not a lawyer.
Yeah.
which
Yeah.
is which is great. I found two things to be great. One, not being a citizen of a country that traces taxes all around the whole world. Two, uh, not being a lawyer.
Yeah. Right.
So I can
And by
speak
the
my mouth.
way, yeah, this is a trend across the whole legal industry, though. So, one of our investors is the Legal Tech Fund, which is a leading legal venture capitalist, and we get to see through them all the innovation happening in the legal space. And it's been a trend for some time now that technologists are taking things that used to be done only by lawyers manually, and they're automating them and putting them into a technology solution with the help of lawyers, but that
Yeah.
technology solution is not a lawyer, right? But it can walk you through a divorce. It can walk you through
Oh,
business and corporate related contracts. It can walk you through all kinds of things that you used to use a lawyer for. And now a lot of people don't because it's been codified into technology. And so I do see
in
what we're doing also as, in some ways, part of that trend, right, towards providing legal related services and telling people, look, you should get a lawyer if you can. But if not, to your point, here's our experience. Here are how things usually work. Here's what all these other lawyers told us. And we'll try to help you make the best decision you can.
the most interesting there, what you said is tech people take the law and turn it into a tech product, which to me is like templating, where every
Yep.
single lawyer has a contract template that if it applies to your situation, they will just fill in the template, bill you for the
Yeah.
whole contract. Sorry, but that's how it works.
Yeah.
So
Yep.
what I started to do, since I'm not a lawyer, is when I started out doing web design in 2019, I literally looked at contracts from other agencies and I just pulled the parts that I liked to be my
Yeah.
own conditions. And I put
Hmm.
them in because I knew that that other agency most likely has a lawyer, or if they don't, that is the contracts that they used and they're way bigger than I am. So if that worked
Yep.
for them, should work for me. And then I'd cross check those just simply with Googling some of the law stuff.
Yep.
And if another template mentioned it, I'm like, okay, sounds cool. And in
Yeah.
Germany, there's one big company that takes those imprints and the GDPR stuff and just literally gives you checkboxes, which then adds a paragraph to that document. Uh, they will say that they are like lawyers working on this stuff, but there's at the end there's always a disclaimer that this is a template and
Yeah. Not
you
legal
are fully
advice.
liable for all of it because
Right.
though, dude, everyone using that obviously takes it as legal advice, and it's the only document they put on the webpage. So obviously, like they have an interest to make that as safe as possible. Though
Yep.
legally, like you said, not a lawyer, not their problem. Um,
Yeah. And I do truly recommend working with a lawyer whenever. I mean, the interesting thing is, the core answer is whenever there's a lot at risk, like hire a lawyer to help manage that risk. Another way of saying the same thing, though, is as soon as you can afford a lawyer, that means you have enough money that's at risk, right? Or assets or project or whatever, or progress. And so, really, as soon as you can afford a lawyer, you really should hire one, right? It really is better, but it's still good that all these technologies are available. It can give you a head start. It can help people who can't afford a lawyer, etc.
I have one startup founder friend that told me that their lawyer is Perplexity. And Perplexity, for those unfamiliar, is
Yeah.
an artificial intelligence, like a chatbot style thing, where you just input your question and it searches the whole web and it gives you answers back. The good thing about that is it cites sources. So you can have a general first glance and, okay, this is like an intuition. And then you can go and ask it about the laws. So it will bring up pages that cite the law. So you can actually then also read the law, which to me is
Yep.
really interesting because it doesn't replace the lawyer, but it's a really cool tool to just ask the question the way that you understand it and ask it and get an intuition back.
Yeah, I think over half the things I used to use Google for, I now use Perplexity for. So I'm a big fan. I have not used it specifically to craft legal documents, but I might have to give that a try.
I haven't used it to craft legal documents, but I have used it to inform research into legal documents.
Okay. Makes sense. Yep.
So that way I did. I just find that crafting legal documents, if you take a lot of the template stuff that you find through those searches and you just combine it, and you have some sense of having drafted once before, if you pass
Yep.
them off to a lawyer, they'll be like, okay, this is fine. Maybe you want to add this or remove that out of specific reasons, but then generally you can do that, which saves you if you don't have the money to just have the lawyer do everything. That now brings it down from a 10-hour project for the lawyer to a 2-hour
Yeah.
project, because
Yep.
it's a half an hour discussion because you already bring the knowledge because you were
Yep.
informed. And then maybe it's 1 hour for them to do it, and then half an hour to just discuss it once. Right?
Yep.
So I found that cool. Tying back from law, which we've now discussed at length, into blockchains, what is like the core problem that it solves? Like we just talked about law at length. Like law seemingly solves the coordination problem. Why do we need to add this new thing?
Sure. So, I mean, let's take a really simple example as a starting point. So, historically, before blockchain, if you wanted to have an escrow contract where I'm going to give you a piece of property, the title to a piece of property, and you're going to give me $1 million. The only way to do that was through a third-party company, an escrow company, with a bank providing custody on the back end, with contracts written by lawyers between the parties, et cetera. Now, with blockchain, it's actually extremely easy to, this is like the easiest thing to do with blockchain, close to the easiest thing to do with a blockchain is to build an escrow contract that says when party A gives me the title and party B gives me the money, send them to the other person. And it's open source and it's free and it's instant and there's no documents involved and there's no third party involved and there's no bank involved. There's no insurance company involved, et cetera. It just works. Now, I'll give a caveat, which is you still need to think about the legal side of a deal like that beyond just the mechanism of actually doing the escrow, right? If you're doing a meaningful transaction like that, there's no way it's actually good enough to just use the smart contract. You need to think about the legal and tax and other implications of doing that transaction in the first place. And you probably will still have contracts involved. But still, the fact that you can take all that stuff and automate it onto the blockchain is really meaningful. Now, let's say instead we apply a similar concept to the way organizations are run. And when I say how organizations are run, I'm talking about the absolute like core components of an organization, which are keeping track of who owns how much of the organization or who has how much governance rights if there's no owners because maybe it's a nonprofit. And so keeping track, which is very easy to do in a smart contract as well. You keep track that, you know, Sam has 100 shares, I have 50 shares, this other person has 25 shares, et cetera. You can also easily have that smart contract buy and sell shares as needed or create new shares. And so already you're taking something that for a traditional, like say C corporation in the United States, takes tens of thousands of dollars and lawyers and a bunch of documents and a bunch of signatures and verifying that the people who you're talking to really are who you think they are, right? All this stuff. And again, you're making it instant and free and transparent and impossible to defraud, at least again, in terms of the core way the transaction is happening. Now build on top of that a layer of governance, which is basically, okay, how does that group of people make decisions? Well, since the smart contract knows that you have 100 shares and I have 50 shares, it's also very easy for that smart contract to hold votes. So now instead of your bylaws saying, when we want to hold a vote, we have to do it with the following 4 paragraphs. We'll talk about how votes happen, talk about how you call the meeting or how you send notice, what method of communication, how many days until you can have the meeting or the vote, how is the vote counted, how is it audited, right? All this stuff that goes into legal documents, and you need like a secretary or a lawyer to actually implement when you want to do a vote. Now you put that vote all into the code of the same smart contract or 2 different smart contracts, whatever, because they can all talk to each other. And now you've taken these very core elements of how almost every single organization on earth works. And for the first time, you've automated them. You've taken something that previously could only be done through documents and lawyers and other administrative people. And for the first time, you can do it through technology instead. Now, same caveat as the prior simpler example, you generally are not going to want to start an organization and raise money and take action without considering the actual legal implications, right? We've already talked about the legal entity side. There's other important things too. But as far as you can program things into the smart contract on the blockchain can handle those components. And then you have to figure out what still needs to be done through legal documents, et cetera.
The legal part is always an interesting one because I had a discussion come up with a project where they wanted me to build a casino for them, which
Huh.
could also be classified as skill games if you wanted to make it legal in some
Sure.
U.S. jurisdictions, right? But like
Mm-hmm.
the general spiel was poker, blackjack, those kind of games, but have all of the payment processing be done through the blockchain, then add some social layer like Farcaster, which is like a social network that every user has a blockchain address, so you can use the blockchain money sending around to easily build a casino where everybody can instantly cash in within one click, which is way nicer than even a credit card input or Apple Pay on current online web pages. I was like, okay, can you build this? And I'm like, sure, I can. That's my like that's what we do. We build those applications. The legal aspect though was like, well, who's now operating that? Because being in Germany, getting a casino license is hard. If we then also are found for whatever legal reason to custody assets, then either we have a lawsuit where we now are defending against not having custody because it's a smart contract or system and the user owns the key and whatever, we never have custody of it. Well, then we have to defend that. The closest equivalent to custodying assets is a fund. So now that would maybe also require a banking license. So like taking those two together, which are unclear regulatory in Germany, well, the casino one is clear, like don't do a casino unless you have a license. Then it was hard because then we looked into jurisdictions for that project and who operates it. Because I was like, I may be able to host it if the legal side of the things are really clear that I'm only provisioning tech. So like I'm only doing tech work. All of the other stuff is part of whatever the other corporation is. So there, like you said, the technicals may work for this coordination, for the shares, for all of it, but the legal still holds and is where you as a person are bound and are liable.
Yep. And you're touching on something that also touches on another unique characteristic of the blockchain compared to every other technology that's come before it, which is until the blockchain, if you wanted to host a casino app, software, whatever, the only way to do it would be literally on a computer, either in your house or in an Amazon data center that's owned by you or somebody, right? Somebody has to own it, and that person can be held responsible for the activity on that computer because you own it, you control it. With the blockchain, nobody controls it. Or you could make the argument that everybody controls it together. And of course, the legal structure around how we think about blockchain in general is yet to be fully developed. But so far, most, I think, legal scholars, certainly courts and judges, have not challenged the idea that the blockchain is different from a person or a company running something on a computer. Right? When you put something on the blockchain, you are no longer in control of it unless you build in the ability to have control over it. And it's not running on anything that you own. It's running on the blockchain, which is run by thousands or hundreds of thousands of people, depending on which blockchain. Some are smaller and may have different legal implications. But for the first time, right, you could launch a casino and then not have to host it. And so how does that change the implications for a project like what you described, where maybe the component that would otherwise have had to get a license no longer needs a license because who's going to get the license? It's just running out there on the internet, on the blockchain.
That was one question that we asked as well. And then the legal side of things is, well, if we're now provisioning a front end, meaning like we're facilitating the use of that backend by providing the user interface to do it, well, then we're at least complicit in what could be considered an illegal gambling operation, depending on how that legal framework works. It's like you could also make the other side of the argument that you started to touch on a little bit in the sense of, well, now you don't have anyone running it. So this is like this permissionless thing running on every single computer. So who's even liable? The only thing we do is we build a user interface for it. If the user decides to use that, well, they're not even using us. We're just passing it off to them. So we're never even touching any financials. So we're not a payment processor, which, by the way, you also needed before that. Just there's really good podcasts, interviews of the Pornhub founder talking about how no single payment processor wanted to work with them when they founded Pornhub, just because of reputation. It was a beautiful business for all the people involved processing those payments, still because of reputation. So you don't need that anymore. We have the blockchain for that. But if we just have a UI for even say an exchange, are we now facilitating that potentially illegal exchange? So are we now violating securities law or gambling law in that case? And how does the blockchain work in that sense? And that's, I think, where it's great what you're doing with a DAO, because you're walking the way for those kind of questions to eventually be solved in a good way, where you can say, oh no, this is just a development company. What you have to actually forbid is the usage of that blockchain stuff in your jurisdiction, but they're fine, or however that should go, or whatever the framework is to define if they're fine or not. Maybe that UI facilitates something illegal. And then the question is, what is gambling? But it may also be that the UI just now allows you to send peer-to-peer payments. That is not illegal. Though, are you a payment processor now? Do you need a banking license? Right? And then that becomes janky real quick.
Yep, totally. Yep.
Like, how do you think about that when you're drafting laws? Like, does all of that go into consideration?
Yeah, so, first of all, there's always a question of, okay, there's all these unsolved problems that will have to be dealt with in the coming, couple decades, let's say. Like some of the stuff you're talking about, right? Who do you hold responsible for, exactly what you said? Like if I'm just hosting a website or an app that allows someone to interact with a different piece of software that does something illegal, is the person who built that interface held responsible? What about the software developer who wrote some open source code that someone else put onto the blockchain and then someone used directly without an interface? Or what about an interface that's built for interacting with any Web3 app, and then someone chooses to use it to interact with an app that's considered illegal? Then it's almost like a web browser, right? It's almost like, well, geez, you could use this thing to do anything you want. It's not my fault someone, used it to do something illegal. So all these questions and many others will have to be addressed. When we're setting out to help write the next laws for the Marshall Islands, we are not trying to solve every problem at once. And it's not just because of resource constraints, although that's certainly one. I mean, we're working on the next law right now, and we're having to say, geez, of all these things we want to do, we have to prioritize. We have to pick what's most important right now. But the other thing is, I think it's kind of too soon to try to solve these problems. Like the technology has barely even been built yet. And so it would be crazy for governments to try to legislate and regulate it before we even know what's possible and how it works. And so I think it would potentially be a mistake to try to be very specific about, how legal liability will work in all these different situations today when the situations have hardly even happened yet. Now, that doesn't mean that legal scholars shouldn't be thinking about it. It doesn't mean we shouldn't be thinking about it and having philosophical and ethical discussions about what direction to go. And it doesn't mean we shouldn't think about these future concerns when we're drafting laws and regulations today. But there are some things that are, you could almost say it's intentionally left vague because it's not the time to solve that problem yet. A big one is I'll give you one that I think is a really interesting example that at some point we may have to solve through specific legislation is what makes a company nonprofit versus for-profit. Okay. Traditionally, there was really only two options for companies. Either you're allowed to distribute profit to your members, your owners, or you're not. And if you're not allowed to distribute the profit of the company to people, to owners, you could be a nonprofit and you get tax benefits everywhere, stuff like that. Okay, what about a situation, and we have this situation in crypto today, where you have what are effectively nonprofits because they are not allowed to distribute dividends to their members or owners, but have a market cap of billions of dollars, and therefore token holders have made millions and millions of dollars off that investment. Well, what are governments going to say in the long run? Is that a nonprofit or a for-profit? And to give actually an example that's even farther to the gray area, what if you have to stake your tokens to get a share of the organization's profit? Right? Is that distributing profit to owners in a way that would necessarily make the company a for-profit? Or could that be considered a compensation for people who are taking an action to support the organization as opposed to a distribution of profit, in which case maybe it could still be a nonprofit? And there's other things that
Staking
people
your
do.
like staking meaning you take some of your coin or like some bring it to their smart contract, they custody it in there or hold, they lock it up, whatever, and then you get kind of like interest. So it's like putting money in the bank and getting interest, or like how would that staking generally look like?
Yeah, so staking would be, to your point, they would not use the word custody because when things are on the blockchain, no one's custodying them. But yes, you would lock, let's say I bought 1% of a DAO's tokens, right, a project's
Yep.
tokens. They would have a smart contract where I can lock up my tokens, either with the ability to take them out at any time, or maybe I have to lock them up for a certain amount of time, or depending on how long I lock them up for, I get different rewards. And by locking them up, I get some benefits. First of all, it benefits the company or the project or the ecosystem because you're removing supply of the token, which drives the price up, which means the company can sell more of them and have money to fund the project. Now, I certainly would not want nonprofits to be disallowed from doing this. Like, this is an amazing innovation in funding nonprofit endeavors that for the first time in the world, we have nonprofits with a market cap. They can raise money on capital markets, even though they're nonprofit companies. We don't want to get in the way of that. Like, that's amazing. But will people look at this staking and say, okay, well, everyone who holds the token is staking it, because there's no reason not to. Or let's say 98% of people are staking it and you're simply distributing profit to those 98% of people. Is that equivalent to distributing it to 100% of people, for tax purposes? And that's where, the questions will have to be resolved at some point. But again, I think today it's just way too soon because there's just too few examples of people doing this. It might be better even for this to be addressed in the courts at some point so that it can be litigated and then eventually pass laws and regulations about it. Hard to say.
One interesting caveat there as an entrepreneur is if you take on a project doing that, or your project wants to do that, you're doing that, you're taking on the legal uncertainty as well. Meaning that, say we were to build that casino that we outlined, it's like, well, yeah, we built it. We can argue for why we are not a casino. We're a dev shop. Though you could make the argument to the other side as well. At least that we're facilitating it. And like if you're distributing those tokens through, say, the staking mechanism or some other form, then are you now a for-profit and regulated under securities law because you're technically giving out dividends, or are you not? And if you want to be an innovator there, you're also taking on that legal uncertainty. Whether its responsibility is yet to even be declared, right? So you don't even know if you're taking on legal responsibility. Which
the only thing I might push back on a little bit is, there's pretty good history and case law and tradition and legal experience around when people working on something are protected from liability, personal liability, versus when are they not. And it's not always hard. It's not always super hard to keep in the lane of the things I'm doing should be protected from personal liability. And the liability only fall on the company, right? On the legal entity.
yeah, but that still means that if your legal entity does it, your baby, quote unquote, it's like an entrepreneurial
Yes.
business most likely feels like
Right.
a baby. Then your baby is taking on that, right?
Yes, right.
So yeah,
your livelihood as far as it comes from that company. Yeah, absolutely.
if it's your only one, for sure. If you have multiple businesses, then you may be like, okay, I can play around with this legal entity because maybe I even set up a new one, because then if that legal entity dies with the project, I do not even care, because there isn't that much money in that one legal entity for me to be impacted. Though if your one project is one of those DAOs, for example, that now have multi-billion dollars, most likely the founder's sole income or wealth also is somehow entangled into that. So if they found a way through being part of that distribution mechanism or whatever to get it out, get it into another legal entity, or hold it personally, then they may now also be fine. But there is that sense of like that project taking on the risk. Maybe it's not you
Yeah.
personally. That was like personally me speaking to personal, not being a lawyer. Uh, but
Yep,
I
you're
think
right.
that is interesting, because there's
Hmm.
there's a tech evolution innovation that you're taking on. There's a social innovation you're taking on, and illegal. So if you
Yeah.
if you look at it from a risk profile, there's at least some that is way higher than just doing pure tech or pure social or tech and social,
Yep.
because of that concept.
Yeah, it reminds me of something I like to talk about it on my podcast, Just Dow It. That's a podcast oriented towards people starting DAOs. And one of
Lovely.
the things we talk about occasionally is that if you're starting a DAO, you're trying to solve two problems at once in today's world. You're both trying to figure out with everyone else in crypto the right way to start DAOs, and you're trying to build whatever product or company or organization you were planning on building anyways in whatever structure. And so you have to get
Yes.
two things right, right? In a world where most people fail at starting companies as it is, now you're adding another risk on top of it. And to your point, yeah, sure, maybe because you're in crypto, if you're in crypto, more legal risk too, right? And so I think that's one reason that DAOs are moving slower than some of us would like, is that it's really challenging trying to operate with new technology, new governance structures, and build successful organizations that still have to be financially sustainable through product or donations or whatever, which in and of itself is extremely hard to do.
Yeah, I found that from speaking to and working with foundations in general, that they have a hard time sustaining. And if it's a foundation of somebody really wealthy and they have a generous donor or a general group of donors that is kind of like locked in anyways, they're fine. But that is generally not the case. So then they are either having something that they sell and they're non-profit. So how does that work with the profits and reinvesting them, whatever? Or they always have money issues. It's like you're
Mm-hmm.
doing that already as a foundation. Where in crypto, you may do to the token. Once you get that marketing cycle up, you may not have money issues anymore. Then you just have the other issues we talked about, and then you
Yeah.
may also need to build a product, which, well, we can go around Silicon Valley and the whole world and ask entrepreneurs how hard it is to get something that people want to use. I was talking to somebody today where they're 84, so they've seen a bunch of stuff over the last years in the south of Germany, and they literally walked me through the decades of how stuff changed, how businesses went in and out,
Mm-hmm.
and they're in the hospitality business and in transport. And they said, well, my business is now the I can't pass on all of my costs to my clients, because, for example, the restaurant, the consumer hasn't earned significantly more than 10 years ago, but my costs have now gone up sometimes 3 to 4 times. Meaning he's just scraping by on the business side now. They're luckily at net zero instead of being a profitable business as it was 10, 20 years ago. Um,
Mm-hmm.
which is one hot thing there. If you're in tech, that it moves so fast, kind of like where you were saying that now Google is less than 50% of your searches, which is
Mm-hmm.
insane to tell anyone just 2 years ago,
Yeah.
yet alone 5 years ago. And then 20 years ago, if you said that you would use this thing called Google, everyone would be like, dude, that's called the library, sir. And no, there's no quick lookup. We have to ask the librarian if they don't have the book. Good luck. Uh,
Mm-hmm.
so like, that is how fast that moves. So you're having all of those interesting caveats already, and then you sprinkle in the crypto legality, where we in Europe we love to regulate. So
Mm-hmm.
Europeans try to now regulate it, And it doesn't. It helps at some point because it makes the cases that they wanted to regulate clearer. It doesn't help with all the other stuff. And if they just
Yeah.
regulate all of it, then we're in this European dilemma again, where nobody can innovate because now it's all regulated,
Yeah.
which has
Right.
happened to all of tech in Europe.
Which goes to the point of why try to regulate something so early in its development. I mean, I think that was the mistake with Mika, which is the big, EU regulation around crypto. They rushed it so fast. And everyone, complains about how slow the US moves, but I'm not sure it's a bad thing. You let the technology develop as much as you can in the current system. And then, when you understand it better, write the laws and regulations around it.
Yeah, I really love that from a mental standpoint. From a business entrepreneur standpoint, I get why people want the regulation because then there's something to play within. Because
Yeah.
right now, if you're not using the Marshall Islands, and even that, like you said, has been around for 3 years only, which is nothing in law terms.
Hmm. Yeah.
Um, if we now take that and we want to do something like, oh, I'm a project and I have a for-profit, but I just need a way to do business with some of my holders or redistribute some of my earnings without wanting to go through the SEC, well, that's hard. That is
Hmm.
easy technically with crypto, but legally that's hard. It's like
Yeah.
what people are asking for is just legal clarity of am I doing something illegal here or not?
Hmm.
That doesn't have to be fully regulated. It just has to be like you can just experiment with it, and some people will just not care and just do it, and others will be more cautious because of the legal, not even because of the tech or the entrepreneurial, just because of the legal. So I think there is a case to be made for why that regulation would be helpful. Though I think the stronger case is that regulation just would be overdone and redone just too much, which then maybe stifles the use cases for a lot of people because can't take on that.
Yeah.
Or I'm not saying can't take on that legal risk. I'm saying they don't want to take that on.
Yeah.
What's like your take on moving into a gray area or an undefined uh, path of law?
Um, I think that is a risk entrepreneurs take. I think the United States has always been good at producing people who are willing to take a lot of risk. And so it might be one reason why innovation continues to happen here despite lack of regulatory clarity. Um, I think if I think about like the issue you're talking about, which is probably the biggest thing standing in the way of crypto today, is the SEC. If I had to pick one government agency somewhere in the world, it's the U.S. securities regulator, the Securities and Exchange Commission. Um, but to the point of the conversation we're having, you know, until if 3 years ago the SEC had tried to write a law or a regulation around exactly when you have to follow securities laws or when a token is different from a security and what rules you have to follow instead, they would have screwed it up. In fact, what they've tried to do is just call every crypto a security for the most part, and that would kill the industry, right? And it's not
Yep.
acceptable, and no one's going to accept that, including lawmakers now. Um, uh, but what we need is that kind of we need to write the laws for the gray area. So like when you launch a token and it's not clear that it should be a security, but we do need some investor protections to protect people from fraud or just making bad decisions. What's that middle ground? Where do you draw the line and say, for example, with the way securities laws work in the States, probably elsewhere, one of the factors you look at to determine whether a token is a security is whether there's some central group of people, usually called management, that you're relying on for the success or failure of the token or the potential security, right? And so, where do you draw the line between when a crypto token is or isn't relying too much on a central group of people, or are there two or three levels, right? And you could call it the level of decentralization of the project, right? Where do you draw those lines? And I'm not sure, drawing those lines 3 years ago would have been the right thing to do, even though it would have made life easier for a lot of founders in some ways. It would have also prevented a lot of innovation that might happen otherwise.
Yes.
But I
I,
do think
I
that's
can
what's
perfectly
coming in the
speak to
next.
that because of Europe. Uh, Germany
Mhm.
has a piece of paper out on how they want to tax or how they think about taxing crypto securities. It just didn't cover NFTs. So because of innovation, and we now had this NFT, which NFT is instead of just being a currency that is always the same and interchangeable, it's now a unique coin for each thing, which may represent different values and all of that. And that wasn't mentioned in the coin regulation, so we are still now gray, still couldn't do anything we wanted to do, but technically we had some crypto regulation, right? To just add to your point of it most likely makes sense to stay gray.
Yeah. Yep, exactly. I do think all this will change in the next 2 years in the United States. I think we'll have a significant crypto regulation that will define when something is too centralized or decentralized enough, and how that impacts what rules you have to follow. And my hope, if they do it right, which I do trust that they will, you never know, but I do trust that they will, because of the kind of groundswell of crypto support in the U.S. government right now, or coming soon. I think there will be new types of disclosure requirements for crypto projects, depending on what characteristics they fit into, so that the people working on them have to and are legally obligated to tell the whole community details about the token and the project and their intentions, so that people can make intelligent decisions about whether or not to buy the token. I think that's probably a good idea. You could just say anyone who's working on, I mean, it's hard to define. I won't try to define it right now, but I think those rules will be put in place, and we'll have some disclosure requirements.
One of the problems you have with defining it is you have a D for decentralized in my DAO. So when you say, well, they're depending on some central group called management, usually, a DAO may have some prominent actors as driving some initiatives forward. Does that mean they're also management? How is that? Like, you're the perfect person to not ever want to define it, because you couldn't really, right?
Yeah. I mean, here's what you could do, for example. I'm not sure this is perfect, but you could say that if you hold one of the following positions related to a project, right? You're writing code for it, or you're promoting it, right? Those are maybe two good examples. Then you can be held liable if that token does not have some kind of disclosure document associated with it. Now, if you do that, you're not saying who has to create the disclosure document, right? But founders who are creating these things would know that they better create one. Otherwise, no one will promote the token and no one will work on the token, right? And so something like that, I mean, it's not going to sound great to everyone, because software developers don't want to hear they could be held liable for some other person screwing something up last year. But you got to do it. I mean, you have to put in a requirement, at some level, that holds people accountable if something is not done right, because it's the only way to get people to do stuff. And you need to also have a requirement that whoever is creating the project, whether it's one person or 10 people and whatever their exact roles, have some responsibility to disclose something, right? So maybe that would be a good solution.
Well, one fun exercise there would be for literally every crypto project to literally go out and write a risk analysis as part of that disclosure document. So I personally, and this is a personally held strong opinion of mine, is that there's a bunch of bullshit crypto projects that never have done a risk analysis, never have done a market analysis of who would actually be their customer, and if they had to write it down, would realize that they have no reason to even exist at all. It's a strong opinion. Some people may agree with that, others may disagree. You can probably say that about a bunch of businesses in general, but that would be fun to read. That would be a fun reading exercise for me.
Yeah. Yeah, and what we need to do is make sure that these disclosure requirements are not so challenging that people are not able to do them, right? Because we want this technology to be available to everyone, from the smallest restaurant that wants to tokenize, right, and raise money from the community, because it wasn't possible before.
Securities document. Yeah, it shouldn't be a full-on securities document.
Right.
It shouldn't be like
exactly.
going public.
Right.
Unless technically that's what you're doing with shared ownership and whatever. So you may be able to say, like, if this sounds like a stock, it is a stock, full on filing. If it doesn't sound like a stock, just give a general 5 questionnaire. Like, coming from the credit card industry, where I did security analysis before, they have different escalation stages on the amount of money that you have in your systems or how
Yep.
big your company is. So you can go there and be like, well, here's a just simple questionnaire. So every merchant that has a point of sale for handling credit cards, they will just have a quick questionnaire with the accreditor that gives them that point of sale, and they're good. That then they take that and they file that up and have a bigger report because they're now reporting to say like the Mastercards and Visas, like the credit card company issuers, and then they have even bigger reports to do. So you could somehow layer that up just in the
Yeah.
amount of how the token works, whatever. And then there's going to be some gray areas, but I feel like could that could also be a way.
Yeah. Totally. Yeah. And hopefully there will be a category of exemptions for when no disclosures need to be required, right?
I feel like that should be
So
the general case, but then going into layering it, there should be some. Okay, if you fall into,
yeah,
if you don't, there will be a lot of gray area as there is today,
yeah,
because people will try to hit the exemptions. But
yeah.
if we go back to the general industry and we're talking about blockchain, the Web3 industry in general, what are the biggest pain points that you think people and businesses entering the space or in the space need to watch out for?
Well, I would say the biggest pain point is just how hard it is still to start using Web3, right? To get a wallet, get money into your wallet of some kind, and then start interacting with Web3 apps. Um, it's just still challenging, and a lot of people are working on this problem, including the major wallet providers. I think it's partly challenging because people are using their wallet for two purposes. One is investing, and two is or storing money, and two is interacting with Web3. And when I say interacting with Web3, what I mean is, for example, let's say you want to go to a website about a DAO that you're part of, and you want to vote on that, on something, that a proposal that's come up in that DAO. That's not, you're not sending or receiving money. You're interacting with the technology. You still have to sign it, what's called a transaction, with your Web3 wallet, the same place you hold your Bitcoin, your Ethereum, everything else, Solana, whatever. And so that's when we talk about interacting with Web3. Or let's say you're going to use a social network and you need to log into the social network. In Web 2, you'd use your email address. In Web 3, you sign something with your wallet to prove to the social network that you are who you say you are. So those type of interactions with Web 3, unfortunately, are just still challenging and risky. And it's hard, even as someone who's very experienced in the space, it can be hard to know if you can trust a given website, because it feels, the same transaction you might be signing to, like, let's say, vote for your favorite photo in a photo contest. It looks very similar to a transaction you might sign to give away all your money, right? And
Yep.
so people are rightfully scared, to interact with a lot of these things. So we need to solve. It goes from on ramp, off ramp, which is getting money in and out of crypto wallets. It goes to the crypto wallets usability themselves, just as a piece of software. It goes to the how you feel safe and secure when you're using your wallet to interact with Web3. I think all those things really, I think it's some combination of solving those in terms of the industry solving the problem. And eventually people are just going to have to learn something that feels very hard. I mean, you look at every other technology, adoption in history, it's hard when you start. And this might be even like a harder one than we've had before, but using the internet was extremely hard for people. Using computers at all was extremely hard for people. Using a mouse was really hard for people. Like, all this stuff actually was really hard. And then for every single one of these things, between like 1 and 5 years later, everyone was doing it and it didn't feel that hard. Right? Maybe the more recent examples are like social media companies, right? Everyone said, I would never do that. Why would I want to sit at my computer and post photos or look at photos, stuff like that. And maybe that was more of just a mental obstacle than an actual challenging thing to do. But like passwords, emails and passwords, that's really hard to get a lot of people to do. So while I do think the industry will eventually do better at solving this problem, I also think eventually everyone's just going to learn how to do this newer, more complicated thing, and they'll start interacting with Web3. So that's the challenge for most of Web3, I think, including DAOs.
On the technical side, there's a lot of innovation going on. One thing people do in 2024 now is the app creates one of those wallets, one of those accounts for you. You just use that. Then you have the whole problem of how do you actually get into that account? Is that a wallet? that you sign in with. Is that an email? Is that a password? Is that a passkey? Is that something else? And you have a whole lot of challenges there. It's like there isn't that perfect, smooth onboarding experience in general. Like try logging into your Facebook account after you're logged out, right? And Facebook is like the big company doing social and consumer technology. Like if they haven't fully figured it out, how are we supposed to do it with this whole new technology that is even attached to finances? So
Yeah.
we have to think about dealing with financials, like you said, when you have your investment money on the same thing, or could have, or sometimes even have, where other times you just want to vote on something. So I feel like
Yeah.
that is generally a big problem.
We probably also
So
need an insurance component, built into TradFi at almost every level. When I say TradFi, I mean like traditional financial services, whether it's your credit card, whether it's investing in stocks, whatever, there is insurance at every step of the way so that if something goes wrong, you get your money back or you get your stock back or whatever
yeah,
at every step of the way. There's no reason you can't do the same thing for blockchain. I just am not aware of anyone really doing it yet. But we'll have to either just provide it in a more private, like direct manner. Like maybe I could sign up for $100 a month or 1% of all my transactions go to the insurance company a year or something like that. And in exchange, if I lose my money due to a known like fraudulent or like scam, they give me my money back, right? I mean, that's not
dude,
even technical to build.
yeah. The greatest technical challenge there is like doing the actual accounting of how you want to structure that product, because you can look at all the data the user does on whatever account that they put in, like the wallet address. And
Mm-hmm.
once you classify something as a scam, like a smart contract, you can auto backfill all of your customers having interaction with that and just refund them or give it back,
Yeah.
because all of that data is open. So you don't have to get all the credit card statements, get the bank statements, get the eBay receipt if you have been scammed on eBay or Facebook Marketplace or whatever, right? It's like the technicals are way easier to do in Web 2. The question is just how much value and how much risk is there for the insurance company, which is
Yeah.
one reason that when I deal with insurances around the contracts and the development work that we do for Web3 projects, they find it even harder to estimate that and the policy that they want to give compared to just tech. Tech in general for them is hard because of
Mm-hmm.
the data regulations and the high fines for that. Financial crypto rails even harder because they don't know, will that project succeed and have 100,000 in it. Does success look at billions of value locked? The insurance policy has to take all of that into account, which means they do a middle thing, and then it's way too expensive for most projects.
Yep.
Or you have to cap it, and then if they cap it, and I'm like, dude, I'm expecting 10 million in the first month, and they're like, oh, so now we up it. But then I'm like, dude, but this is too expensive. What if it doesn't work? It's like there's that risk adjustment to me is harder than the technicals.
Mm-hmm. Yeah. Makes sense.
Like on the opposite side, what's the biggest opportunity that you see in Web3 today?
Well, first of all, I'll speak to DAOs. I think the biggest opportunity in DAOs, which is part of Web3, is for someone to make a really easy to use. It could even run on Web 2 at first. It doesn't even have to be on the blockchain, but I think by now it's not that hard to actually do it on the blockchain. Tool that lets small groups of people or larger groups of people get together and be a DAO, right? Pool their money, vote on stuff, etc. Um, it could be for clubs, like high school and college clubs, right? Kind of like just provide an easy alternative to doing those simple things the traditional way. I think something like that could be really popular, or in anywhere in the DAO stack. Taking what today is just a really complicated technical problem combined with a challenging governance problem to design an organization. Pick one use case that like is relevant to your life, a type of organization you're passionate about, with clubs, local organizations, for-profit companies, charities, associations, homeowners associations, unions, whatever, like whatever that thing is, and design the structure to have that organization be a DAO really easily and repeatably by anyone who wants to do it, and turn that into a tool that someone can use. Because today you go to the major DAO tooling platforms and you're basically designing an org structure from scratch, and you need some
Yeah,
technical knowledge about Web3 and DAOs. And it's amazing how much progress these tools have made, but that's just too much for the average person. Whereas if I said, here's a tool for high school clubs to manage money collectively on chain, and there's just a few options when you're creating the club, maybe that's what would get people to use it. So
Yeah.
I think that's a really
Yeah.
big one.
I
Yeah.
feel like the same default would be great here, because we don't really have that in our industry. Like a lot of it is for in industry, designed for in industry.
Yeah.
Instead of taking those cases where, okay, I'm thinking about a use case, a consumer or a certain group of users, and then I'm designing for them instead of designing
Right.
around the just tech. Uh, no,
Yeah.
that's
Or
really cool.
around, right. Or around trying to solve for every organization at the same time, right? Rather than just one type of organization.
Yeah, no, that's a great way to sum it up in general. Going from the legal structure to how blockchain really helps, and to a simple sample of how could you actually apply DAOs to use. Like, well, look at those
Yeah.
cases in daily life. Thank you
Yeah.
so much, Adam. What is a general like good place to find you to learn more about creating a DAO, with MyDAO, and follow you in general?
MyDAO is at mydao.org. That's MIDAO.org. I'm at 0x Thriller on Twitter or X, or The Thriller on Farcaster for anyone who's on Web3 social already. Those would be, and my podcast again is Just DAO It, the podcast for people starting DAOs.
I want to learn about what the name inspiration for Just DAO It was.
That
I
sounds
heard there's a
cool.
shoe. I heard there's a shoe company with a similar
Yeah.
slogan that sounds really cool.
They
That's
actually
great.
had already sued someone for using Just DAO It in their name for some other thing.
And you just
And
didn't
so
care.
I just, at some point, I'll change my name, and hopefully the publicity from them suing me is worth it.
I feel it could be somebody bought friend.com for a few millions, and now here I am talking about it and has been covered at length.
Yeah.
Uh, Thank you so much for coming on, Adam.
Yeah. Thanks for having me. It's been fun.
Thank you for listening, and thanks for the guests for coming on to Techsuite for the C-Suite. In the description below, or the show notes, whatever you want to call them, you will find the awesome resources our guests mentioned to get you started. You can find links to our guests, and you all can also find a summary, takeaways, and other links to keep connected with the show. Thank you so much for listening. Have an awesome day.